Hi, my name is John Dowdy, and I'd like to give you a quick review of the stock market for the week ending July 26, 2013. After viewing this video, if you'd like more data, please come to my website, www.superchargedretirementIncome.com. Today, we'll look at the long-term view, which will use weekly charts, and also the short-term view that will use daily charts. Analysis of charts is part of what we call technical analysis. And some people wonder, does technical analysis really work? Can you figure out where the market's going from the past? And if you are interested in that topic, then I have a post on my website that I just posted today that discusses why technical analysis works. So if you'd like to see that, then please come to the website. The website's free, and you're welcome to take a look at that post. So let's look at the S&P 500. This is the weekly view, and it uses SPY, which is the ETF for the S&P 500. And on this chart, we see we have a trend channel, a green channel that goes all the way back to 2009. And so far, the market has been contained within this channel for the past 4 years. The previous high was way back in 2007, which was 157.52. And so we stayed below that high for a very long time, but last April we broke above it. Once we broke above this resistance level, it became support level. So we broke above it, went all the way up to almost 170, and then we had what's called a throwback to support. Luckily, the support held, and we bounced off of it to go to a new all-time high at 169.86. We successfully defended the support, bounced off it, and now we're looking at clear skies ahead until we get to the top of this green trend channel, which is about at 175. So a very bullish long-term view. For a shorter-term view, it's also bullish. As you can see here, we have another channel. This one is a short-term channel that goes back to November of last year. And this has contained the market pretty well. We broke above this channel in May. It looked like we were breaking out big time, but we pulled back. Then we dropped below it, had a 7.5% pullback in June. It looked like the bears may be gaining control here, but not to be so. We bounced back and made a new all-time high this week at 169.83. Very bullish. Now, the previous closing high up in this area was 166.30, and the previous intraday high was 169.07. So these two levels serve as support. So the support region is between around 166 and 169. And as long as we stay above this support level, the bulls is definitely in charge. You can see we have 3 moving averages plotted on this. We have a 200-day, a 50-day, and a 20-day moving average, and the market is comfortably above all of these moving average. In fact, the market has moved up so swiftly that now we're beginning to worry, is it overbought? Has it gone too far too fast? So to get some idea of if it is really overbought, I did this plot. This is the S&P 500, and this is the 200-day moving average, and I took the difference between the closing values of the S&P 500 and the 200-day moving average each day. That's plotted in the top region as the red line. This is not in terms of points, though. It's in terms of standard deviation. So this takes into account the volatility of the S&P 500. So this is the number of standard deviations that the current market is above the 200-day moving average. And as you can see here, once we get about 19 standard deviations away from the 200-day, the market has a tendency to pull back. In fact, it's pulled back about 6 out of 9 times that this has happened. In this region, it just kept going. Even though it went high, it just pulled back, but it never really had a correction. So based on this, there is a possibility that we're overbought and that the market could have a correction. That doesn't mean that it will. You can stay overbought for a very long time. So we'll have to wait and see. But this is just to be a little bit cautious as we move forward. So in summary, this is a very strong bull market. We closed this week at 169.11. The all-time intraday high was 169.86, and the all-time closing high was 169.50. Support is now 166.30 to 169.07. We closed right above support. And as long as we stay above support, the bull is well. And in fact, as long as we stay above the 50-day moving average at 164.59, the bull is healthy. Resistance will come in around the 175 level. Now, we may be overbought. We may see a small correction, which would actually be healthy. We would like to see maybe a small correction, and that would be a pause that refreshes. And from that little correction, we could move higher. So let's take a look at that next week to see what happens. A legal disclaimer. The views in this video are my views and only my views, and should not be construed as any investment advice or an offer to buy or sell any security. Of course, you and only you are responsible for your investment decisions. An investment involves risk of loss. There is no gain without risks. So, and past performance obviously does not indicate future profits. We try to extrapolate, but there is absolutely no guarantees. So good luck. Let's keep a close watch on the market next week. Thanks for viewing. And as I said, if you'd like more data, please come to my website, www.superchargedretirementincome.com. Thanks.